Welcome to the Decentralized Podcast, where we break down the world of Web3, digital assets, and DAOs with me, your host, Pietri Basson.
Tal Zackon, welcome to the podcast. Really looking forward to the conversation. Co-founder and CEO for Trace Finance. I was thinking we usually try and kick things off a little bit differently, not getting into business initially.
Yeah.
I know you went into the military sort of immediately after school. What would you say was valuable in that? What did that sort of teach you in working in a team, etc., that you could use later in life?
Sure. So first of all, thank you for having me. As you might know, in Israel, it's mandatory to go to the army right after high school. So men serve for 3 years, women serve for 2 years. I served for 6 years in the Israeli Special Forces. I think that, I can't expand too much about my service, but I will say that what I learned is that anything is possible. Like, we did all kinds of very interesting operations and things that I would say even the action movies that sometimes you see and you feel like, oh, this is doesn't make any sense. How did they do that? And when you actually train and you work on an operation for over a year, and then you go and you're able to execute it, and you come back home safely, and you're like, okay, I was able to do that at a very young age. Also, I think it kind of opens up the world and the possibilities of what you can achieve moving forward. So after the army, I went to study, and then I was in venture capital, starting Trace, thinking about what I could achieve building a company. It wasn't far-fetched. And I was like, can I build $1 billion company? Yeah, I think we can. And I think a lot of it is thanks to my service.
And so you did that transition from working in the military to VC and then running a company. I know you work with Frontline by Combat Ventures, where they're sort of helping soldiers to find jobs after the army. Right. I spoke with a guy that he was actually special forces in the US, and he was saying it's hard to find a job, but actually you have really good skill sets. You know, you can manage a team, you can do really good planning. How did you find that transition, sort of going from the military into civilian life, if we put it that way?
So I think there's a very interesting dynamic in Israel, because, startup nation, right? That's what Israel is called. It's the probably one of the highest public companies on NASDAQ come from Israel, after the States and maybe one other country, I can't remember the name. And if you think about it, it's also the highest startup per capita in the world in Israel. So there's like very much this entrepreneurship sense of anyone can do it in Israel. The thing is that in Israel, you have the intelligence corps. You have a unit called 8200 and 81, and that's where many of the cybersecurity and data scientists come out of. So, of course, when you start a company, the first people you need to hire are engineers, right? So there's this kind of natural draw towards the engineers that are coming from the more technical units, and then some of the combat soldiers, the operators, get kind of pushed aside, right? Even if you go and study computer science later on, when they compare someone who has 3 years of studies and maybe 2 years of experience after studying, and someone who actually did the same route, but then 3 years before was also a software engineer in the Israeli intelligence, it's kind of an easy pick to go with the person who has more experience and comes from the Israeli intelligence, right? And what we try to do as part of the foundation is to elevate the status of these operators and these combatants in terms of what kind of skill set they have and how we can bring them into the startup nation and make them part of the ecosystem. And it's like, I was in combat. Many of the people that have done very well in the ecosystem come from the combat kind of background. So we tried to, I think it's first of all like helping them understand that they can believe in themselves, and it's not only like a closed garden for those tech and intelligence teams. There's a lot of room for them to also be part of the ecosystem and contribute.
I think that's really interesting, is just understanding that you can, add value. You've got all of these skill sets that's been built out, but believing in yourself is the hard thing.
Yeah, it's actually interesting. I've been interviewing candidates for all kinds of sales positions, and I talked during consensus to a few founders about hiring people, and there is something about, I'll say, Israelis sometimes that they aren't soft. I don't know exactly how to talk about this, but like we do get criticized for being aggressive many times, and that can be a downfall for sure. But I would say that many times I see this as an advantage. It's like pushing and hustling and do whatever it takes to make things happen. And I really like that mindset, and I think that a lot of it comes from the military service.
Okay, well, you get into one of the next things I wanted to discuss is your first sort of position was at a VC company. How did you end up getting that position to work with a VC firm?
So yeah, that's being aggressive and pushy. So during university, I also was part of an exchange program in USC in Los Angeles. And towards coming back to Israel from the exchange, I was talking to all my mates at the exchange program. They were all over Europe and Australia, and they were talking about these internships that they'll be going to, all kinds of consulting firms and investment banking. And I was like, wait, I'm going to go back to Israel. I don't really have much to do. I'm going to need to wait 3 to 4 months till my next semester starts. What should I do? And in Israel, there's no concept of internships. There's no unpaid internship. Doesn't work that way. And I said to myself, if they can do it, I can do it. So I'm gonna invent something that doesn't exist. I'm gonna invent this internship. And I decided to cold call over 100 VCs in Israel on LinkedIn when I was a student. So my CV doesn't look like anything except for having some kind of military experience. I just started like messaging one after the other. I would say out of like 100 messages, maybe 3 people got back to me.
Okay.
And out of those 3, one was actually willing to meet me for coffee. And during that meeting, we talked a bit about my service and what I want to do. And at the end of the meeting, it was like, I'll see you next week, 9 a.m. And I was like, do you have a follow-up meeting? He's like, no, you're going to start working here. And I was like, see you then. And yeah, that was like my first step. So it was like this unpaid internship that I made up, and someone was willing to give me the opportunity to actually start my career there. After a few months, I became the general manager of the internal accelerator, which is like crazy, right? After a few months of like just being an intern, stepping up to that kind of role, that's actually what got me into the Forbes 30 under 30 at the time. And then from there, I started growing inside the firm, associate, principal, and I was there for almost 4 years. And we can go into like the transition from VC to founder and operator, which is also like a whole new world for me.
Yeah, no, I definitely want to get into that. But I think one of the interesting things in a different interview you did, you said you guys were going almost pre-seed with some of these companies and then helping them sort of junction that you guys were building it up and going through it with them. What would you say, what did you learn there? Because, I mean, you almost had perfect schooling to see, you know, if you're pre-seed, almost working on the idea, how you mature that, get to a funding round. What were the lessons you learned there from doing that a bunch of times?
I mean, I learned a lot from also sitting on boards and working with these companies. I think the most like astonishing thing was the fact that we used to meet these teams that had like maybe an idea and a presentation. And we were like, here are like a few $100K, let's start working together, see what we can make out of it. And then after 3-4 years, seeing these founders mature and suddenly a team of like 50-60 people, offices, PR, raising 20, 30, $40 million, it was like, wow, these things actually work. These things actually work. And I think the way that we worked at the junction, like we had this very interesting process of like what a startup needs to go through to be seed ready. Okay, so I learned a lot of like seeing how founders manage the process correctly and what kind of mistakes they make on the way. So when we started Tress, I thought that I could actually kind of copy the way the successful founders operated, and also learn from the ones that didn't really succeed of like what not to do. even though doing things yourself just puts everything in a different perspective.
Yeah, no, that's very interesting. And I mean, I think one of the things I wanted to find out about is, I know you guys have raised, you've been on both sides of the table now raising. A lot of the companies we work with, they're raising as well. What are some of the mistakes you see and things that people should be looking out when raising?
Yeah, so I'll just say, I always have this joke with my co-founder Elon that like when I feel that I'm a bit bored, I'll go and raise money. It's like sort of a hobby. But like, I think that one of the things that founders should understand is that raising money is about relationships. Okay, you never too early start talking to VCs. I would actually say you should start talking to them as early as possible, even if you aren't raising, because then you give them a window to look into how your company is doing and how you are progressing, right? Because if you meet an investor when you're at like 500K ARR, right, and you keep talking to them maybe once every month or two, and you hit 1 million, 2 million, then they see the progress rather than just seeing you at a very specific point in time when you go and raise money and it's only one number, like you already hit 2 million, but they haven't seen you move forward and build. And I think as a former VC, I can say seeing that process, understanding how you operate as a founder is crucial for me making the decision if I will be investing or not. So that's the first thing. Second thing is that you should look at the at raising money as like a horse race. Okay, you have a line, or say a bunch of horses that are going to be racing. Those are the VCs, right? And each of them is going to be running at a different speed. And you need to make sure that no horse is getting too far ahead, right? Because at the end of the day, you want to have 3 or 4 horses at the finish line, giving you term sheets, and then having this kind of competitive throwdown of like optimizing on terms. And if one gets too ahead, and then they give you a term sheet, then, I mean, it might be a great term sheet, but you don't have much leverage, right? You can use that to actually go and talk to the other VCs and get them ahead, but you always want to make sure that no one is too much ahead, and you have to make sure that everyone is kind of the same line the whole time. That really helped us when we were fundraising. Yeah.
Okay, that's interesting. And then for teams, what should they be looking for in VCs?
Yeah, that's a good question. I would really recommend talking to portfolio companies, not only the ones that are introduced by the investor, but looking at the website and just reaching out, cold, being like, and founders will answer you. Like if you reach out to them and say, like, hey, listen, I'm actually talking to your investor about working with them. Would love to talk to you for like 5-10 minutes, just hear about how they added value, the interaction, to the sit on the board. That's the first thing. Second, and this is super important, when you meet a VC, you always feel, or you have this feeling that the VC has the power, has the leverage, and they're interviewing you, shooting questions at you, and you need to answer, right? The founders I respected the most when I used to meet are the ones that could actually ask questions back. What is your investment thesis? How big is the fund? How do you split first checks to follow-ons? How do you look at companies that aren't doing very well? Okay, how do you add value? Ask them questions. Ask them what stage they are in the fund, because it makes a huge difference if it's a fund that they just finished raising and now you're the first check, or you're at the end of the fund cycle and now they're much more picky of like how they're going to be deploying the capital. It does affect the way they look at you as a company. So these are legit questions. It shows that you understand their business, and I think you can really gain a lot of points in their eyes.
I think that's really interesting, is that interaction with them and then the value add afterwards. You've mentioned a few times now that, I mean, you sat on boards as well. How did you find that experience, sort of sitting on the board? What were your expectations? What were some of the challenges?
Yeah, I think that looking back, sitting on boards was one of the reasons that I decided to move from being a VC to starting a company. Because at the beginning, when I was sitting on boards, I used to think that my advice was like gold, right? I've never done this before, and I still had the between courage to nerves to kind of sit and tell the CEO about what I think you should do with his business. And only sitting now on the other side, I understand that most of my advice was total bullshit. To be very, very honest.
Yep.
And looking back, I was also a bit embarrassed of like the kind of tips I used to give. So I think that also when you choose a board member, when you work with a board member, you should take a lot of the advice with a grain of salt, as I say, and you should really kind of filter out what parts of the advice you should take. At the end of the day, you are the founder, you know your business better than anyone else, okay? And you should use your gut feeling and the advice of the board members, but to an extent, okay? It's not like absolute truth.
I mean, it's interesting, that interaction and, playing with, working with them. I know you've said in some interviews you used to do very regular catch-ups every 2 weeks, etc. And I know founders are always writing investor updates as well. That's also one of the ways to interact, let them know what's going on.
Yeah.
What would you say, what are you putting in your investor updates at the moment? What would you like to see in there? Because I think for the VCs, that's also an important one. What's going on? Give us updates. How can we help?
Sure. I would say, so I actually wrote, when I was a VC, I wrote a blog about monthly updates and why they are important and how they can really help you get more value from your investors. I don't think I've ever written a monthly update at this. Okay. And because as a VC, you're looking at the founders with a very specific scope of like how I interact with the founder. As a founder, you have customers, you have team members, you have strategy, you have products, you have engineering, you have so many things going on. Working with your investors is a very small part of your day-to-day, okay? And if you are a good founder, you know when to turn on the added value from investors and how to use them and which investors to use for what kind of purpose, right? And I know my investors very well and I know when to use them for what purposes. I don't really think I need these monthly updates. And when I do, I talk to them on WhatsApp. And I give them these, I do have like, I push all kinds of data points that I think are relevant. But I will also say that this is very individual. Like each company operates differently. For us at Tress, we have very good momentum and I think we know what we are doing. And I don't need this constant support from our investors. For other companies, this could be pivotal and they want to talk to them on a weekly basis and monthly updates could be very helpful and valuable. So there's no there's no one truth. When it comes to monthly updates, I think the two things that you take into consideration, the first one is that you stay top of mind for the investor, which is good. So if something happens during the month, they know, oh, maybe I should talk to Tal and Tress. This could be super relevant for them. Number one. Number two, asking them for very specific things. Like, do you have a good candidate for a sales lead in APAC? Do you know a product advisor we can talk to about this kind of SaaS product? Okay, so you have to be very specific in what you ask them. And also help them help you. Because if you just say, like, I need a salesperson, you'll get nothing. Here's a job description. Here are 3 people that I saw that you're connected to on LinkedIn. Do you know any of them? If you know them, here's a message you can send them describing who we are. You have to feed them with the spoon. That's how it works.
Make it easy.
Exactly.
And then it's easy for them to help.
Exactly.
Yeah.
That's true for a bunch of things also.
No, that's true. I think that's a good segue into, because you've been talking about the business side. So what made you decide to step over the fence almost and start your own startup? And then I think the follow-up on that is, what made you decide that Tress is the problem that you want to solve? Because as an investor, you're looking at, different problems people are solving. So how did you decide that was the one you wanted to work on?
Yeah, so I touched this earlier, like sitting on boards and like not feeling to the full extent that I know what I'm talking about was one of them. On a personal level, I want to be the best at anything I do. And when I was an investor without any operating experience, I thought that I would never be the best investor in the world. And that was a turn down for me. And I was like, okay, so what should I do? I'm like, okay, I should go build something. And then Elon, my co-founder and CTO of Tress Finance, we served together in the army. and he was the co-founder and CEO of a cybersecurity company. They were running for 5 years. He raised over $30 million, and someone who I really respect. He came to raise money for me when I was at the fund, and I was like, here's an open check, go do whatever you want. And after a few weeks, he was like, listen, my co-founder and I don't think we're going to do something together in the end. Also don't feel like doing anything in cybersecurity. And I was at the time thinking of like what I'm going to do next. So we went out for lunch and we started throwing ideas. And he was like, mate, are you like thinking of moving out of VC? I'm like, yeah. And he was like, okay. And I think both of us at that point were like, we're going to be working together, you know? And that was like, when I understood that Elon is free and is open to work together, I was like, I'm like, if there's one person I want to build something with, it's Elon. Okay. So that was like a crucial point in time that I was like, I'm gonna go for this. Then we started thinking about ideas, and the way we thought about a bunch of ideas. And when the idea for Trust came up, I had this kind of click light bulb moment when I was like, as an investor, I will invest in this company. And if I have that, like, I'm going to invest in this company, that means that like that's something we should be working on. And that's how we started working on Trust.
Okay. Where did you initially get that idea? Was it sort of a personal struggle, just getting the data, being there? Did you have other, some of your VC clients that you were investing with?
Yeah, so it came from 2 ways. So first of all, as an investor, so we were a generalist fund, early stage. We invested in a bunch of companies, mostly like cybersecurity, insurtech, drones, DevOps, cloud infrastructure, you name it. 2018, I led the company's first blockchain investment. Okay, so I already started interacting with the space. And we had a few more investments in the fund that were more crypto and blockchain oriented. And I saw that for them to kind of work on their financial data and even report to us what's going on wasn't the easiest thing. Okay, Elon, even though it was like fully on cybersecurity his whole life, he started looking into like the crypto space. I didn't even know that he was into that, right? And he started participating in IDOs and doing some side projects with tokens. And he saw a huge problem in like how the teams he works with are managing their payments to him as a service provider, and also to other vendors, and even grants and how they're handing out assets. And he showed me like on WhatsApp and on Telegram that they're sending screenshots to each other of like Etherscan. It's like, there's something here. And I was like, there's something here. So we came from like 2 sides of the problem, and we met in the middle, and we understood that there's a huge problem to solve. And at the time, there were already different accounting applications for crypto. When we started talking to companies that are using them, what we understood that the accounting application might be great, might be beautiful, the UI might be amazing. Not the case, but might be, right? The problem was the data. Okay, if you don't have full coverage of all the networks, all the exchanges you're working on, if it's not reconciled, anything you do on the accounting side of things, on the application side of things, means nothing. Okay, and that's when we understood that this is a data problem. And we started building an application. We looked for data sources, and nothing was good enough. And we were like, we have to build our own data engine. And that became the product. The financial data became the product. And on top of that, we're building applications. But that is the core, that is the IP of Trust Finance.
So would it be safe to say you guys are almost a data layer with applications built on top of it?
Exactly.
So it's purely taking, because you guys take on exchange, you could take multiple different chains and then dApps, different DeFi applications.
Yeah.
And then you can use all that data.
Exactly. Like if you think about it, they are accounting applications, you can call them subledgers. We are often like perceived as a subledger because that was the first application we built, but we are a data company to start with. Our core product is the financial data lake, and on top of that, we build the applications. The accounting application, the reconciliation application, the reporting application, the audit application. You're now adding the risk and policy application, which is really cool. So moving from back office a bit towards the middle office. We are building the portfolio management system, the PMS, also as an application as part of our OS, our operating system. And then because everything is data oriented, we also have robust API products, right? So we have the staking data API, which has nothing to do with the subledger and accounting, right? It's like a standalone product that is data oriented, serving staking providers and custody providers that are offering staking through their platform. And then we also have the proof of funds. They're supposed to take the proof of reserves throw it out the window and be a centralized database for exchanges, custody providers, companies working with end users and custodying their funds, of how they can operate the whole financial data side of things.
Mm-hmm. Yeah. No, I think what's interesting is sort of the different modules that you just mentioned. The one that I think a lot of people will be interested in is the portfolio management side. So what have you guys done there? Can you get into every investment, see all of your staking rewards, cost basis, all those kinds of things? And I mean, you were an investor yourself, so you probably know what people were looking for.
So I'll say this. Every module that we build, every product that we build, it's not like I wake up in the morning and like, I have this idea and I go to Elon and he's like, man, you are amazing. Let's go build it. Okay. Every single feature I thought about, I went to Elon and he said to me, if you don't bring a signed contract, someone's willing to pay for this, I'm not building it. 9 out of 10 features into the garbage. Not going to happen. We work very closely with our customers to understand what they need, and that's how we build the features. So when it comes to portfolio management, we have a bunch of asset managers, customers of ours, and they're saying to us, I wish I had this dashboard and that dashboard, and I wish I could see the funds or my movements in this way or that way. So of course there is the accounting aspect, but when it comes to portfolio management, we're looking more at the performance side of things. We already have the data. We already see the underlying investments. We already see the initial entry into positions. Now, how can we help them understand better the value of these positions and the yield that they made? Okay, so that is where the portfolio management part is going to go.
Okay, and then, I mean, you mentioned the audit module. I have to dig into that. I used to do a lot of crypto auditing, built a lot of tools. What are you guys doing on the auditing tool side?
So the way we see this, first of all, is the reconciliation, right? So the auditor will come and say to you, I need to know all your balances as of 31st of December 2023, okay? If you, as a controller or a CFO, didn't sit in front of a screen during New Year's, instead of having a glass of champagne and celebrating the New Year, you sat in front of a screen and took a screenshot, you're doomed. You do not have that data, okay? What we build on the back end, because it's a financial data, like we see audit transactions. So what we do is we calculate from both sides, okay? We'll build up the running balance. So from the genesis of the wallet, all the transactions up to the specific point in time, 31st of December midnight, okay? And then we'll go from today and we'll calculate backwards, okay? And we'll also query the archive node for that date, okay? So we have 3 data points. If the 3 of them match, we are 99.9999% sure that that was your balance as of that date, okay? And that is SOC 1 and SOC 2 verified, okay? So then you can use that for your audit and say, I know that these were balances for all the wallets and all the assets at that specific point in time, okay? And we also have the validation of the underlying data of all the transactions to actually show that that was the case. That's what we do on the audit side.
Yeah, I mean, I love that. I remember people taking screenshots, all those kinds of things, rolling it back. And it's one of the interesting features is you don't have snapshot functions in lots of blockchains. In
Crazy,
apps.
right?
So, yeah.
I mean, it's good for us because that turns, like we call it time capsule. So in the system, you can choose any date and any time, like very granular, generate a report, will show you all the balances as of that time.
Yeah. But even for portfolio management, that's great because you can go back historically, see where I was, see performance.
Exactly. So, and that's the power of the financial data because everything is stored. Now I have these data points. I can build the time capsule, help you generate reports. But I can use that data, as you said, to build the yield and the return on investment for anything I did, right? So I have the data. Now I'm building the different applications. I'm hearing from the customers what they want. I have the data. It's just about executing.
Yeah. I think one of the challenges is a lot of people are like, oh, it's all on chain. The data's there.
Yeah, no.
But the data isn't that easy to manipulate and use, especially when you're looking at different dApps, etc., where each developer has built it a little bit differently. So how hard are all those integrations if you're integrating, different dApps, different new chains?
Yeah, I'll just say about this on-chain legend, okay? I challenge anyone listening to this episode to take one of their wallets and reconcile all the transactions to their balance today. I assure you it will not be reconciled. I assure you, okay? When it comes, so one of our claim to fame is that we integrate very quickly to new blockchains, new exchanges, new data sources, okay? We give SLAs of like between 1 day, 7 days, 3 days, 60 days, whatever you want, depending on the price you're willing to pay, okay? And we were able to do this because we built something in-house called the collector. Okay, so we have these generic modules that once a customer puts in a request for coverage, we can very quickly send our team to go investigate and put in the data. Okay, so when we work with customers, one of the things with them, we can guarantee 100% coverage no matter what blockchain you're working on. That is unheard of. That's like, I'll see our customers go like this, but you know who loves this even more? My sales team. Because it gives them so much power during a sales call, getting onto a call, even if this prospect is using a different vendor, okay, most times 70% of the data is coming in automatically into the system, but there's like this huge chunk of like 30% of data that they're uploading manually, okay? Then I come as Stress and say to them, you know what? Done with the manual stuff. 100% coverage from the day we start working together. And they are like, I'm buying that.
And then doing those integrations, you said you've built that module internally.
Yeah.
What is the team doing? Are they going to the new chain, analyzing it, seeing how long it's going to take?
Yeah.
Because, I mean, EVM compatible is fairly easy.
Correct.
But then you've got a few things that are not EVM compatible.
Correct.
I'm sure that's going to be a
Correct.
challenge.
So the R&D team is built out of cybersecurity experts.
Okay.
Adam comes from cybersecurity background. Lots of the people that joined the team early on come from 8200, 81, or intelligence corps. Very familiar with cybersecurity. Okay. Cybersecurity has a lot of research built in. You need to go and investigate and research malware and different places in the code that are somewhat vulnerable, right? So we really know how to look into the data. So when we get a request for a new chain, we have a research team that will go and look at the chain and be like, okay, which part of the module can the collector work on? And where there's like a delta, we'll need to go and develop customized for that. So you said EVM, but lots of the ecosystems, we were able to have like a breakthrough, right? So substrate, okay? Substrate chains became very easy for us, okay? No one else in the industry can actually handle that. Cosmos, we have over 30 chains that are Cosmos based that we support today. You give us a new Cosmos chain, we'll support it very quickly, okay? So we built this kind of, even in the collector, we understand families or ecosystems that we can generate the connection to the new chain very quickly.
Okay. Oh, that the cross-chain ability is also very important, I think, and that we're moving towards a more cross-chain world where eventually I think people won't even care which chain it is. They're moving, easily between chains, using the dApp that they want to use, but the data is really hard when you're doing that.
And as I said, that's part of our IP. Another thing, if you think about cybersecurity, is reverse engineering. Okay, a lot of times my team need to look at the data, reverse engineer how it was created. Okay, no one else today knows how to do that. Like our ability to go very granular on the data, explain what happened in each transaction and the context, because the context is super important for the audit, for the accounting, for the realized gain and loss. It's part of the whole package. And we know how to do that very well.
Okay. You mentioned proof of funds as well. So what is proof of funds? What are you guys doing there? And who's using proof of funds?
Sure. So the way we see proof of funds is that if you are an exchange, custody provider, or any kind of application that is managing customer funds, okay, you have to know what's happening with your customer funds, not only at the given live now, but also historically. You need it for audit, you need it for compliance, you need to keep track of what's going on. Now, many times these companies have internal systems that are keeping track of this, but don't really take snapshots of what's happening in terms of customer balances. And also, the way they work on this data is not SOC 1 compliant. So when you need to go through audit, it's very difficult to rely on the data. What we've built, what is at proof of funds? The underlying product is a time series database of all your customer wallets and addresses, okay? Historically, what they held at every given point in time. That gives you the ability to go back in time and really slice and dice the data. So say, on the 1st of June 2021, how many accounts of my customers were holding Bitcoin? What was the amount of Bitcoin held by those customers? And what was the fiat value of all that Bitcoin, okay? Inside the proof of funds, you can actually get proof of that specific question, okay? So we know how to build that historically and then also keep track of that moving forward. And it gives a huge amount of confidence to these companies to know there's a centralized database that is collecting this data, keeping track of it, monitoring it, and storing it over time, okay? And that can be used not only for compliance and audit reasons, but of course it will be used for internal analytics, right? Because that's part of how the company operates.
Perfect. And you've mentioned SOC 1 a few times now. I mean, I used to do SOC 1s myself. I understand, what they are and how they work. But for people who don't know what a SOC 1 is, why is that actually important that a company like you guys have a SOC 1?
So the main reason this is important is because if we want to build an audit function inside the system, one of our modules, we need to make sure that our customer can communicate the data to their auditor, and the audit doesn't have to do extra checks on top of our data. Okay, they can just use it as is, and the amount of friction and headache that is reduced, and not even that, the amount of money that they save, right? If you can reduce the amount of work that your auditor actually needs to do, you can save a lot of money. Okay, and that's the importance of the SOC 1 at the end of the day.
Yeah, no, I think the origin of the SOC 1 is always an interesting story for me, because it used to be a company like you, the auditors would come to a client, say, what is Trace doing? And then each auditor would come to you guys and try and audit all of your controls, which is each client is paying for it. It's a headache for you.
Terrible.
And then you got the SOC 1 where it's like someone goes in, they test your controls, and they sort of sign off and say, yes, these guys are doing all of these things, and this is why you can rely on it.
I talked to an auditor, ex-auditor yesterday, and he said, I used to work with one of my clients, and they used another system, not Trace, and they used to give me the data from that platform, and I used to go and do everything independently. And they used to say to me, but why are you costing me so much money? It's like, I can't rely on this data. I need to do everything from the beginning. Once we have the SOC 1 on the controls, we don't have to do it anymore. So we save you time, money, resources, headaches, you name it. Just turning the whole audit process into a breeze.
And what do you think is going to be the role of tools like Trace in maturing the entire sort of ecosystem? We're seeing ETFs, etc., coming into play now. Do you think those kinds of tools will help a lot with that?
I talked to someone from the Big Four during Consensus, and he said to me that he's seeing more TradFi, traditional companies, starting to move into digital assets, especially on the stablecoin point in terms of like payments and processing different payments. And the CEO and the strategy and the business people are like, we're doing this. First person to knock on the table during the board meeting and say this is not going to happen is the CFO. And he says, I don't know even how to handle this kind of data, transactions, how do I account for it, how do I track it, how do I push it into my ERP, NetSuite, whatever. Okay. And the fact that the Big Four representative sitting at that meeting and the CEO can say to the finance person, we got you sorted out. We've got Trace. You can feel comfortable with approving what we want to go forward, because everything will look like you've been working or the same way you've been working before. That is, in my opinion, taking a pivotal role in how this ecosystem will mature and bringing in the next wave of companies interacting with digital assets.
Yeah. No, I think there are stupid things that people don't think about, like in traditional finance. If you're buying Apple, there's a close, end of New York, end of day, it closes. It's not 24/7 trading. There's one market where it trades. You're not trading on hundreds of exchanges across the world. So valuation, those kinds of things are things that traditional CFOs have never had to deal with.
Exactly.
And now,
There's no, when it comes to crypto, you never have time to rest. There's no break.
I mean, it's always interesting. So yeah. But I think if you can solve those problems, adoption is going to be a lot easier.
100%.
Because that guy is going to be like, okay, here's a solution, explain it to them, and that's how it works.
Agreed.
What would you say you're excited about in the industry at the moment?
So I think that I had this question in a podcast, I would say maybe a year ago. I was talking about the ETFs. And I got some shit for that because people were like, that's never going to happen. And then you see Bitcoin ETF go through. Then I'm talking about the Ethereum ETF, and people are like, that's never going to happen. It gets approved. So the thing that excites me the most is how these ETFs are democratizing the way people can kind of put their hands into the crypto world and get some exposure to it. But then also the traditional, very large, well-known financial institutions going all in into these ETFs. I always said that crypto is too big to fail. I think that with these ETF approvals and the amount of money going into that, it's done. It's a done deal. So
No, I think it's really interesting because you've got the traditional guys coming in, and you've got the pure DeFi foundations, and all of them need to mature, have these opportunities, be able to do real accounting. So you're seeing it on both sides, and even some of the projects we're seeing much more mature, actually doing their accounting.
Yeah.
Which
2023 wasn't the best year for crypto. We all know that. We still grew 600%. So if you think about our product, it's a must-have. It's an infrastructure play. If it's a good cycle, of course everyone's happy, so there are more opportunities. But even if the cycle, if it's a bear market, you still need to take care of your financials, right? So we are an infrastructure play, and I really hope that we'll be pushing this whole ecosystem forward.
Okay, maybe to wrap things up, not to only do on the positive, what are some of the things that are scaring you, or what are you cautious about in this industry at the moment?
I feel that we are getting there, but we aren't there yet. The clarity around regulation.
Yep.
I feel that the past couple of months have been this roller coaster of like, things are going really well, crypto is dead, we are winning, we are losing. So the elections in November are going to be a pivotal moment, I think, for the industry. It's in the US, but it will affect the whole world, I'm sure. And whoever gets elected, I hope that they will be good to the ecosystem. But I will still say that I'm worried about how that will turn out. I'm optimistic, but you should always be a bit worried about those kind of things, and there are concerns.
Yeah, no, it's been interesting to see crypto becoming a point for the politicians. It's actually a selling point.
It is.
All of them are talking
How
about.
How crazy is that?
Yeah.
I think about where were we 2-3 years ago?
Yeah. You wouldn't. It almost validates us to say. I mean,
but that's what I'm saying. Too big to fail. Here to stay. Part of the of like how candidates are talking about crypto will actually affect how who votes for them. I mean, it's a great place to be in, but there are still concerns. Like we just need that like one more step forward in terms of the clarity around regulation, and I'll be like, okay, it's a done deal. Yeah. We're all going to make it, as I say.
Yeah. But I mean, regulators don't move quickly, so I think you might have the push, but then it's going to take a while to implement.
Yeah, I mean, at least they declare that something is going the right way. There'll already be a positive impact.
Yeah, not just enforcement, which we're dealing with at the moment.
For sure.
Yeah, brilliant. Well, Tal, great to have you on the podcast.
Cheers, thank you
really
for having
enjoyed
me.
the conversation. If people want to learn more about Trace, more about you, where can they find you?
So, Tres Finance, look for it on Google, or Tres.finance in the URL. I'm on LinkedIn. You can go into Twitter, follow us. Feel free to DM me if you need anything. Yeah.
Brilliant. Well, thank you. Appreciate the conversation.
Cheers. Thank you very much.
Right. Awesome.
Thank you for listening to the Decentralized Podcast. I hope you enjoyed this episode and would really appreciate if you could like and share if you got any value from this episode. Please also make sure you follow us on YouTube or wherever you're listening to your podcast to make sure you don't miss the following episodes. If you want to connect with me, you can connect with me on LinkedIn or Twitter. We've got the links down in the description. And I'd also like to thank our partner for this episode, Hash Directors. Hash provides independent directors to Cayman Islands-based digital asset funds, foundations, as well as BVI entities. And the team over at Hash are really experienced. They can make sure that you consider all of the different things that you need to look at when setting up a company. They really know their governance as well as regulatory compliance. If you want to learn more about Hash Directors, there's a link down in the description. I'll see you on the next episode.